With the situation unfolding in Ukraine, many are wondering how the conflict is affecting their wallets, their finances. Brian is talking with financial expert in studio tonight, looking to get you some answers. Brian?
Denise, we do have that expert live in studio. We're talking with Russell Price, Senior VP of MPI Wealth Management, UBS. Russell, thank you for being here.
Thanks for having me, Brian.
First market correction in some 21 months. When you combine the double whammy of inflation and the war in Ukraine, what can people expect in terms of nuts and bolts with the market over the next weeks and months?
Well, when you look at what we've had in 2022, it's been real challenging for investors, right? We started out COVID-19, still concerned about spike in that. We then talked about inflation, the Fed raising interest rates, and then we were hit with the Russian-Ukraine conflict. The first thing that we always look at is how diversified, and right now, investors understand if they're diversified or not.
Right.
What kind of impact do they have? Do they have different asset styles in their portfolio? A great example of asset styles would be value versus growth. Value's down, as of Friday, was down about 5%, where growth is down about 15%. So you really can start to look at a lack of diversification in the portfolio, and that's probably the first thing you should do to improve for the upcoming market.
Experts like yourself look at every scenario. If there is a situation where China invades Taiwan, or if Russia went somehow into a NATO country, that's going to increase volatility.
Absolutely.
But if that doesn't happen, if the conflict stays within Ukraine, if there are brighter days ahead there, what can we expect in terms of recovery? We have seen today the United States may weather this a little better than expected.
Yeah, I think that the recovery starts with the diversification, right? Okay. How deep of a hole are you in? The second part is selecting certain sectors that you expect to do well, whether that is the financial sector with rates rising, those tend to do well, banks in that sector. You can also look at possibly adding energy stocks, right? Even though energy stocks have had a huge run up, talk about a negative market, energy stocks are up 22% this year. So you can still put some of that in the portfolio that will allow you to participate with the upside, still have some downside protection.
Looking at energy, defense, technology, some of the things that could go up. What about the person watching just going, wait a second, a lot of cyber warfare with Russia. What if they hit our banks hypothetically? How much cash should I have on hand? What do you recommend people to just have a little more money aside? Yeah,
I think before diversification, you have to look at what type of planning you put in your portfolio. So a lot of what we do is we look at three segments of a portfolio and we put those into those different segments, or three buckets, if you will. The first is the liquidity bucket. For an individual that is retired, perhaps that's a year's worth of income that's in that bucket.
Is that right?
Perhaps there's you know that you want to buy a house, so that's in that bucket. So emotionally, that's a much better conversation to have with your advisor, with yourself, that you have a year's worth of spending and you don't have to worry about those ups and downs in the market day to day.
We have to wrap here, but a very quick answer on this. How much will the COVID recovery that's already happened, the fact that we're coming down so much from Omicron, how much will that help moving forward economically?
It's going to be a big help. It's going to be a big help with inflation as the dollars that we spend as consumers goes away from goods and into service, and hopefully Vegas will participate in that and have a lot more good upcoming months.
Hey, those tourists are coming back. We appreciate your expertise. Thank you so much, Russell Price with UBS. We're going to check in now with Denise and Ted.